Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. I'm your host, Harvey Freed, alongside me, Harry Glanz.
Good morning, everybody. Good morning, Harvey, John. Good morning. And our special guest, Kyle Lang, RE/MAX. He's the man. He was on the podcast this past Wednesday. He's been with us many, many times on the show, on the podcast. Kyle Lang, good morning.
Good morning, guys. Thanks for having me.
That guy next to him, too, John Cole. Hey, John. Thanks for joining us.
Hey, just running a little bit late. Can't find the car keys.
I love that.
Did you have one of those mornings?
I did. couldn't find my car keys. They were in. They were misplaced, and I'm running around thinking I'm going to have to ride my bike over this place. And then next thing you know, hey, John, what about the spare set?
Sounds like it's real estate related, Harry. Like in
well,
your house.
No. Everybody has this, right? Everybody has it, right? The three most panicky things when you're in a hurry: can't find your wallet.
Yep.
Can't find your keys, and can't find your phone. Yep. Right? Everybody has it. One of the three, at least. Sounds like John had it big, and he had to be somewhere by 9 o'clock today.
Right. I mean, I was resorting to riding my bike. Hey, that's all right, though. Would have been here at halftime.
Well, thanks. And, of course, John, thanks for bringing Kyle Lang in, RE/MAX Dream Properties, Northville, Livonia, all around Southeast Michigan. This guy's always busy. A lot of fun out there. We're going to talk about some interesting things, hardcore mortgage real estate related.
Yeah, we got to talk about the panic that's going on. Let's just talk about what happened yesterday. Do you know what happened yesterday?
Here, you want to go into the Fed yesterday?
Yeah. I want to talk about the Federal Reserve Chairman Powell.
Yeah, if you like
speaking. And I don't know, did you guys see the stock market at all yesterday?
Yeah.
Down 900 points. Okay, people out there, do you know what that means? Okay, ready? Rates are not going down. They're going up. It's slowing down the economy. And you're looking at a situation now where I believe this, and this is my own personal opinion. This is not endorsed by anybody other than me. They don't really know how to combat this inflation because it hasn't been this bad for 40 years, late 70s, early 80s. So do the math, that's 40 years. So there's been no book on how to combat what we're going through now. You throw the pandemic in there, which is the reason why we're going through this, and John talks about this all the time. We have our beliefs on certain things that happened during the pandemic. When you shut the economy down, then you inject all kinds of free money into a situation to spur the economy. You lower rates, mortgage rates, we're going to talk specifically, down to in the twos, where after tax, it's in the ones. That's basically free money. And at that time, everybody thought, well, rates are going to go to zero. How many? Yeah, no, they're not. Now, what's happening is the reverse cycle. The injection of all that money into the economy, people were spending, people got subsidies, they got checks. Okay, some people got checks and didn't even know why they got checks. Yep. These things happen. Then all that free money went into all the spending. Then you had the law of supply and demand. Okay, the demand was high. The supply was low, and you had supply chain management issues. So where did prices go when you have crazy demand? They go up. So now the cost of goods and services that we're paying every day as consumers now 2 years later are through the roof. Look what's through the roof, everybody. Cars, houses, consumer goods, the big ticket items like appliances, construction, and all those things were in such high demand, people were paying big dollars for it. Therefore, you had serious inflation. Now, the Fed is trying to go ahead and combat that. Well, the problem is when you try to do those things and you overcorrect, we had an overcorrection one way low in rates. Now we're having an overcorrection the other way.
Yep.
Nothing's ever done in moderation to correct things. So they're turning the heat way up, and you see what it's doing out there. So that's just a little lesson, in my opinion, nobody else's opinion right now. If you agree with me, fine. If you don't, that's fine too, of what's going on. And it's really mucking, M-U-C-K-I-N-G, mucking up the system right now. So that's what's going on.
If you had a client right now, Harry, that was like floating around, would you lock their rate right now?
I lock them.
Absolutely.
But I've always done that. We've always done that. I don't take market risk with people.
Okay.
I don't, because see, people think they know what they're doing.
Yeah.
But I don't take market risk with people. You have a 30-year fixed rate, you lock it in, it's over, you put your head on your pillow at night, you know what your payment's going to be, you know what your mortgage rate is, over, done, go on with living everyday life, right? That's what I do.
Kyle, some of these buyers are going to save some money. Hey, look, they're not overbidding right now. They've definitely been a little bit of pullback. We'll talk about that. 248-539-9797. Harry jumped in right with what Jerome Powell, Fed chair, is talking about in Jackson Hole. He sneezes out there and things go a little haywire.
Especially now.
Yes,
Especially now.
but no doubt, Harry, with a little bit of the recovery, the stimulus check that most people were getting, the boosted child tax credit, that helped some families along. Kyle, people were buying houses. They're still buying them, but maybe a few people had scared off.
Absolutely. I think what we've seen is, now you're seeing a huge influx, and there was a large part of the senior population that during the pandemic, they were worried. Like, they didn't want to move. They didn't want people coming into their houses. They were just cautious of the virus. So now they're starting, okay, we're ready to move now. So their values have increased. The home value is up, whatever it was,
right,
18 to 20% from what it was 3 years ago. But now those interest rates are higher. So when you're in that 400 plus price point right now, a lot of your stuff is sitting for a lot longer than we're typically used to, because there's less people out there that are looking to buy. I mean, less people can afford those houses anyway.
Right. I mean, everybody got really spoiled with the interest rates. And we say this time and time again. If you cannot afford a home at 5% and only at 2%, you maybe shouldn't be buying a home. Correct. Okay? Because there is much more going into a home than just what your monthly payment is and the expenses that come along with it. We want you to be successful. So you got to make sure that you've got that buffer in there. You got to make sure you have the buffer of what you can pay. And yes, rates are a little bit higher, so you may have to scale back. But you should still be out there looking for a home if that's your intention. Look what rent is doing. Rent is through the roof. I know it's starting to come back a little bit as well, but it's through the roof. And I just talked to a couple, they're paying $2,600 down in Detroit for rent. $2,600. That's ridiculous. And you know what?
Unless it's a huge house, it might have the mansion.
Well, that
out
buys
there.
you
they're in an apartment.
That buys you a lot of house.
They
$2,600 a month buys you a lot of house.
It gets you a nice house, a nice yard, a place to raise your family, and that's something that you have to take advantage of right now.
I like where you roll with that. 248-539-9797. Rents have definitely been going through the roof. Rent increases for the fifth consecutive quarter. Medium rents are up over $1,800 across the United States. 4% increase from a year ago, and there's no reason that's going to stop. And again, laying your roots down here in community and everything else that's so much more important about home ownership.
So then we talk about the conversation, is it still a good time? Harry, you said all these things are happening with the economy and the rate. No, it's still a great time to buy because it's always a good time to buy. Listen, even if rates are in the mid-5s approaching 6s, right, that's normal. That's really, that's at the low end of normal,
that's not
right?
bad.
So that's really good. So if you have a situation where John is talking about $2,600 a month and you're paying rent, are you kidding? So you pay 5.5%, 6% for a mortgage payment, and then you take out a mortgage, a 30-year fixed, and you're paying toward a principal. When you pay rent, you're paying 100% nothing, right?
Paying someone else's mortgage.
So there you go. I mean, so is it a great time to buy? Yeah, it's still a great time to buy. If you're in the market to buy a house, which, Kyle, there's still a lot of buyers out there.
Absolutely.
And the inventories are still down.
And we're seeing people circle back, the ones that were getting burned and they just didn't have the funds to be able to write $15,000, $20,000, $30,000 appraisal guarantees. They're starting to come back around now. Again, yes, their rate is increased, but they're going to get the same house. You're paying a little bit less for it, right? So it's still a good time. I equate this to, I remember when my wife and I first got married and someone said, when are you guys going to have kids? And somebody else told me, he said, you're never ready to have kids. He said, just do it. Same thing for a house. You're never going to be 100% ready, but if you want to do it, pull the trigger, go for it.
You'll figure it out.
100%.
248-539-9797. It's the Hardcore Mortgage Real Estate Business Show. We give you 1 hour of answering all your questions. If you're buying or selling a house, we'll take your call here live in the studio, of course, always. And, of course, you can call us at Capital Mortgage Funding at 1-800-LOW-RATE, the best mortgage banker. Music says we're up against our first little break here, but keep it here on 97.1 The Ticket. Gorgeous day all around Southeast Michigan. We'll show you how to purchase a house. Keep it here. Alrighty, welcome back to the show. Glad to have you here. 248-539-9797. I'm Harvey Freed, Harry Glantz, John Cobalt with Capital Mortgage Funding, Fairway Independent Mortgage Corporation, NMLS 2289, Equal Housing Lender. You can catch us at 1-800-LOW-RATE, the best mortgage banker. That's where you find great real estate agents. Is that me? That's my phone going off, actually. Hey, Kyle Lang. Of course, we can catch you out in Northville, all around Southeast Michigan at the RE/MAX Dream Properties.
There you go.
It's a great, great office, and you're always great to have on the show. We got a lot of things going on here, and there is some scare in the marketplace. I'll just go after it a little bit. 2 years in a row of some great real estate action, sputtering just a little bit, but you mentioned it. There's plenty of buyers out there, and they've kept their eye on the prize. They're buying the house for all the right reasons, getting into a community, getting into their kids into that school district, all those great things.
Yep. So, and what I'm encouraging right now is, so I've been in the business for 7 years now, started when I was 23 years old, so I'm 30. So a lot of my early on clients, So a lot of my clients early on, I'm getting old, I know. So a lot of my clients early on were first time home buyers. And so I'm still selling them on, listen, your house that we paid $125 for, 5 years ago, now it's probably worth $175, $185, even with the rate increases and all those things. Now is still a really good time for you to sell because you're going to sell this house, and then the new house that's going to be your forever house where you're going to raise your kids in for the next 20 years and really plant some roots. So you're looking at between $275 and $350, so much less competition versus March to May of this year. You listed a halfway decent house for $275,000.
Oh, that was bid up.
It was going for $365.
Yeah.
I mean, it's insane.
So, Kyle, we talked about it, and you were on our podcast, and thank you for joining us, as you always do, always bringing it strong, bringing great information. The market today will be different 90 days from now as it was 90 days before.
Yep.
It's moving quickly. We rarely see it happen like this in the real estate market. So what happened before, everybody has to wipe out of their mind what happened 90 days ago and going back to 2.5 years. It's not the same market. So now when you have a seller, and you talked about this on the podcast, but I want everybody to hear what you said. When you have sellers now that say, hey, I'm only getting one offer or two offers on the house, and the house has been up for 2 weeks, and I've only had 5 people walk through it. Take us through now how you're setting up your clients, your listings for those kind of expectations.
Well, it's kind of like what you were talking about earlier, right? With how at first rates went super low, and now we're seeing the exact opposite of it as they shoot up. So same thing. We were telling all of our buyers, hey, you got to be patient. It's going to be a process. You're not going to get the first house you fall in love with. Now we got to tell our sellers the same thing. Listen, patience is the key here. And for me as a listing agent, I know the property is still going to sell because values haven't gone down, guys. Values are still there. So I know it's still going to sell. It's just there's not going to be 7 people fighting over your property. It might take us a week, 2 months. I mean, I have one listing in Brownstown right now. I just dropped the price on it. It's been on the market since the 4th of July weekend. We just dropped the price on it this week because I said, guys, we don't need to panic here. Your house is still worth this. It's just we have to find that specific buyer who's going to pay for it.
Newly listed homes are falling about 5%. When I read that last night, I said that's a little on the high side maybe, or is that pretty much in line?
That's what we're seeing. I think July was a huge swing month for us because I think when the rates shot up when they did, correct me if I'm wrong, like early to mid-June, it kind of caused everyone to take pause. And now I think everyone's kind of settling in like, okay, this is our
New norm.
new normal, like we've been hearing so much in so many different aspects. This is our new normal now. So this is what my rate's going to be. Let me get back out there. Even talking with title companies, the orders were down a lot in July, and they're right back up to where they were in June now.
So it's funny. A friend of mine listed her house at the end of, I want to say June, beginning of July. And it's on the market for, I'm not kidding you, about a week to 10 days. 5 or 6 people walked through it in a week to 10 days, and there was one offer. I get a call. The call is, how come I'm not getting more offers? I said, you got one offer.
Yeah,
and is it
you
close?
can only sell it once.
Yeah, right. I said, you got one offer, and you're close to your listed price, right? Yes, I did. I said, you can only sell it to one person,
right,
and now you're 1 for 1. So that's beautiful. Are you kidding me?
Is this an ego thing where
Okay.
you just have to brag to your friends around dinner that how many offers you got?
Right.
Come on,
Right.
take
How
the
about
offer and
this?
run.
Right. Take the offer. Closed when? August 15th. Done.
Great.
See
Might
you
be
later.
good news.
Next.
Are you happy
Is
with the number? Is that where you're at?
Right.
Is that a huge success story or not? But it was the multiple offers, the overbidding, the insanity. 35 people walking through your house. Everybody out there, it only takes one, and then you're done. One and done. Let's close it up. See you later. Move on.
Kyle, we're helping all the listing agents out here by throwing this information out there, telling, hey, all sellers out there, just take a little bit of a step back. And as we mentioned that article I was reading, 70% of the listings out there, newly listed homes, 70% of them drop that sales price, the initial sales price, as things cooled off a little.
Well, and the other thing that I want to kind of share with people is we're so used to, and I call it the Amazon process or the eBay process, right? Where the last couple of years, a house is listed at $199. You're walking into that house, and every buyer thinks, okay, I got to pay at least that, maybe more. So now people still have that thought process. So when they see a house listed for $199 and it's been sitting for a week, they still think to themselves, oh, well, I'm going to have to pay more than that. I can't write them an offer for $190 and we'll do what we normally do. I mean, when I first started in the industry, if a house was listed at $199, sat for a little bit, you'd write, $199, let me get 3% back in concessions, or let's do $195. Everyone was happy. It was a fair deal for everyone.
Right. So you brought up a great point. Are you seeing sellers' concessions now? Have they come back in the market? For everybody, what a seller's concession is, John, tell everybody out there what a seller's concession is.
That's when the purchase price helps the buyer get into the home. So the seller is giving a portion of their proceeds to help the buyer get to the home for a little bit cheaper. Every 10 grand that you knock a purchase price up or down is only going to save the person about $60 a month, right? And every 10 grand that you knock the purchase price up or down, the cash to close is only going to be about a couple $100 difference.
Right.
So you can help this buyer get into the home for a lot cheaper by saying, hey, give me $3,000 so that I can save some money, get that new washer and dryer that I need. And it helps them get into the home for a little bit cheaper and keep some money in their pocket.
Truly does. $2,500 is sort of a number that's popular. And you go through a house on an inspection. Hey, inspections are back in. I hope they never left. But yes, there's always things wrong with the house if they weren't properly set up, if they're a little bit older. In other words, GFI plugs, handrails, paint, nasty old carpet. I mean, you walk into a house and you love it. You love everything about it, location, schools, but it's going to need some extra money. This keeps this money in your pocket. Sellers concessions have always worked to help families out. And again, call qualified mortgage people and find out how sometimes you can make it a win-win. You bump up the price of the house a little bit to offset that seller's concession, and it works for all parties.
As long as the appraisal can support it, right? Because that's the most important thing.
Generally, it does, and generally they've had luck with that.
Yes, it's a pain in the neck when you do that, and then all of a sudden the appraisal comes back 5-10K later.
You're like,
all right,
whoops.
What do I do?
All right.
Well,
right.
I mean, then you just got to work the negotiations, right?
Yep.
That's just the way the game is played. And, we just got done with, shame on me. My team took on an addendum from a realtor, and it had, instead of concessions, it dropped the purchase price by $3,400. $3,400. Right?
Nothing.
It's nothing,
Changes
right?
nothing.
So then the buyer, we go through the mortgage insurance approval, and the mortgage insurance approval comes back and says, we want some reserves for this buyer, which we didn't need for our underwrite, but the mortgage insurance company then says, okay, we want some reserves for this. He didn't have the $3,600 that he needed. So what did we do? We turned around and said, hey, let's get rid of that addendum. Let's put the price back up to where it was and give the seller concessions in $3,400 to help this guy have a little bit extra money in the bank for reserves. And it was a win-win for everybody. The seller netted the same amount of money that they would have.
Another thing I want to talk about too here is how many times, it doesn't happen all the time, but it's happened often. I know it's happened with you and I, John, before in transactions. Let's say hypothetically someone's paying $215,000 for a house.
Starter home. Here we go.
Starter home. And the house appraises for $220,000. How many times we said, hey, let's bump this up to $220,000
right,
and throw in a $5,000
You could if you've got some.
It stays the exact same for the seller. They're netting the same amount of money, but it's going to help your buyer bring $5,000 less to close. And that could be, even if it's a perfect house, buy furniture with it, right? Redo some landscaping with it.
You can make it so the seller benefits too. Stick with that.
1,000,000%. Absolutely. So, and whenever from the listing standpoint, whenever I'm accepting an offer with concessions, which is happening right now a little bit, I'm always telling them, listen, we'll do this, but if the appraisal comes back light, we're gonna have to,
right,
revisit this.
And I'm gonna challenge you, Harvey, because I don't think that the seller can, in the instance that Kyle's talking about, can net more. It's got to be the same. It's got to. So if the house, the scenario that you're talking about, the house purchase price is $215,000, the house appraises for $220,000, we bump it to $220,000. You can't give the seller concessions of $4,000 and the seller is now getting $1,000 more than they normally would.
No,
have.
you have to give the same.
It has to be. There has to be a same. There has to be a benefit to the buyer, right. And the benefit to the buyer is that they're coming to closing with less cash.
You're saying the underwriter is going to see that right then and there in the documents. Yeah,
because,
that's a winner, though. That's still a winner.
You know that, right? You know the purchase agreement was out there. Mm-hmm. The appraiser already saw the purchase agreement $215,000. So now you're bumping to $220,000 to help this person get into the home in a better situation.
Cal, you mentioned it. Look, it's a little tricky now. We got agents involved. We got two title companies. We got lenders and buyers and sellers. I mean, if you got a grip on the transaction, yeah, sometimes you can step back a little bit and say, hey, guys, would you mind if we sort of restructured this a little bit to benefit all parties involved?
Well, that's a double win because the seller wants to net what they want to net. And if a borrower can bring less money to the transaction actually and save money and put it toward other things, when you buy a house, there are other things, right?
1,000,000%. Yeah.
Furniture, landscaping. You need a lot of things, maybe new appliances.
Yep.
So it helps everybody in that scenario. And I'm glad that you're seeing seller concessions now in the market, Kyle.
For sure. And it's all about being fair, right? And I think some people look at it as buyers versus sellers. It's like, no, guys, like everyone's on the same plan here. Like the buyer wants to buy the house, the seller wants to sell the house. Let's come together here and we'll get it done for everybody.
Have a good closing where you talk about when the garbage day is,
Yep.
what the nuances of the house
love
are.
those
Where
old-fashioned.
did I leave the clickers for the garage
door, right?
And then where are all the pamphlets, because I'm going to read all of them.
You forget about telling you where all the nosy neighbors are and all the important stuff about the guy down the street who can help you fix things.
Wait till after they sign, though, if you're a seller. Don't tell them.
Yeah, Gladys Kravitz next door. Okay,
All right,
when you have Gladys
248
Kravitz.
539 It's the Hardcore Mortgage Real Estate and Business Show in our 23rd year. Again, brought to you by Capital Mortgage Funding. Call us at the office all week long. Get a true approval letter, and I'm going to dive right into there because we do take our clients a step further. We've done this for years. This isn't some new stuff. We didn't just open the office yesterday or a couple of years ago, Harry. Still hearing about people with their 5-star approvals not getting approved. Again, if you're not taking the client all the way from A to Z at the beginning in today's competitive marketplace, John, they've got to be truly approved to make that offer and give them the confidence.
Absolutely. And what we do for an A++ client is run the credit, get the income docs, get the asset docs, and run it through the underwriting engine, right? Yeah. If it's a tough client where it's going to be, you're really kind of, what am I trying to say? Walk that line with that client.
Yeah.
Then we're going to send it to the underwriter.
Sure, borderline cases. Why
Right.
not?
Well, that's what we do.
Run it through the underwriting, send it to the underwriter, and have them approve it. Then they're on the hook for it. They have to approve it at that point because we've already gone down that road. But there's so many different ways you can get this done. But the number one thing is making sure. Yes, you got to run the credit. Yes, you got to see the income docs, especially if you're self-employed. I need 2 years tax returns. Did you here? Harvey's going to know this one. Did you file those tax returns with the IRS? I know they're in your safe there, for you. But did you
But they
actually file
file
them?
yeah.
Because when we get the transcripts back and it says no record found, you got a real problem.
So, here's the issue. When you give us tax returns, we verify it with the IRS. Okay.
And the other thing John was talking about, going to the underwriter, the other thing to remember is, too, property taxes have a huge impact on DTI. I live in Plymouth. The difference between Plymouth and Plymouth Township in property taxes is probably anywhere between, I would say, 25 to 35%. That could have a huge impact on a $450,000 house in Plymouth versus a $450,000 house in Plymouth Township. So always making sure that you're working with a lender, working with an agent that understand, hey, we need to look at this number from both sides of this to make sure that financially it's going to work for you before we go down the path of ordering an inspection, ordering an appraisal, and then we find out, oh, well, the taxes were way too high. Right?
And what are the taxes going to be after they buy it too? Because and that's not something that we necessarily need for underwriting to get you approved. But we got to, in good conscience, I got to tell you what your taxes are going to do in the next year or two, so that we set you up to succeed.
Yeah, don't get lowballed on taxes. Exactly
no.
right. So
Always
how many
go high.
times have you seen that in your
Always.
career? Right?
Oh my God, there's so
If
many.
you're a
people
buyer out there, tell your loan officer, even if you're working with somebody else, hey, I want to go high on my property taxes for this estimate.
Right.
Yeah.
All right, still hearing about these borrowers, sort of last minute it a little bit. Get in front of this. Again, home ownership, take the ease, put the ease back into it, take the pain out of it. Just call us at Capital Mortgage Funding. We'll get you set up with all the right people and that strong approval letter. 248-539-9797. Keep it here. All righty, welcome back to the show. It's the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. I'm Harvey Freed, John Kolb. Harry had to go off to bigger and better things, probably meeting a client, I'm sure, at the office. And again, you can call us there all week long, 248-569-7283. What is that? 1-800-LOW-RATE, the best mortgage bank, or call Capital Mortgage Funding. Get a true approval. We're running all the clients through the complete process, A to Z. Why? Because we know all the different things that can pop up on a transaction, John. Again, you mentioned it earlier, debt-to-income ratio, anything regarding the funds they're working with. Credit, very important stuff.
We left with property taxes. Make sure that you know what your property taxes are going to be, what they are now, what they are going to adjust to after you purchase the home. Because in the state of Michigan, with the Homestead Exemption Act, you have your taxes only increase incrementally while it's your primary residence. And then once you sell it to a new person, that's when the city, the county can then take over and reassess the property and retax it at the higher value. And you have to understand that as a buyer, because it's not going to affect you now. It may affect you in 12 months, 18 months, even 2 years. But you have to know what's coming down the pipe for that, because you have to be able to afford it.
Kyle, nothing's going to crash here. We had some names here. Some bad people out there. Oh, this market's going to crash and this and that. The dimensions, things that are going on in regards to the way that the loans are originating now are probably not going to, we're not going to go that route. So here was a cool stat I picked up. The New York Federal Reserve said that 65%, that's a huge amount, 65% of the $758 billion of the loans that were originated in the second quarter of this year. So that's a lot of business. Those folks had credit scores over 760. They're not walking away from their house. They're not going to jam their credit up, Kyle. They're not going to walk away from their huge down payments or all the equity they have in there. They're just not going to walk away.
Yeah, it's unrealistic to think that. I mean, like you said, above a 760 credit score, you don't get above a 760 credit score on accident, right? Like you take care of your stuff, you pay your bills. So that's one thing that we've been saying. I mean, I remember when the pandemic first started, people were, everyone's going to lose their house. It's like, why? They have great equity. If it's that bad, sell your house. And
don't walk away from all that that you've got. I understand where the fear is coming from because they've seen it before, right? But you have to understand the intricacies that are already in place and what has been gone through underwriting to make sure that this kind of stuff doesn't happen again. And the banks don't want your house. I mean, look what they did during the pandemic. They let
giving them away.
They were let people skip their payments for 3 months, 6 months. I've seen as much as 18 months to 2 years. And and then instead of saying, okay, you owe us all that money at once, they throw it on the back end of the loan.
Yep.
And it's just something that they don't want your home. They don't want to go through that. They don't want to set up those departments again. And it's, so they're doing everything they can to make people successful.
They did. Look, they did homes affordable refinance programs in the past, home affordable modification programs in the past. John, you mentioned it. The government steps in when things got pretty nasty there for the last couple of years. They've done it. They've showed they've done it before. They did it back in 2009 and 10 and made some substantial changes. Again, in the way the industry has changed, people are not going to walk away from their equity. 248-539-9797. Boy, I can't keep laughing every time I see this Belle Isle slide thing. And boy, it's been absolutely bringing some national attention here to Southeast Michigan. Again, always good vibes here across the state. 80 degrees plus today, gorgeous sunny day. Tomorrow's going to be gorgeous. Get out there, be safe if you're on the waterways. Again, practice that safe boating is the way I say. Don't be drinking and driving out there. Also, the golf courses are flourishing. Fall's around the corner. We've got that football vibe. Of course, Kyle, you're a huge Michigan fan. John Kolb takes the other side with Michigan State. Me, I'm out on the West Coast. But lots of fun. And this is what makes our area so great. Even with a lot of high school footballs, the communities, people are buying homes in these communities. I had a couple families tell me a few months ago last year, they said, Harvey, last year was our first year there in the house. The band's playing. We can hear them. Really exciting stuff. All right, we're going to take some calls here. 248-539-9797. If you want to definitely join the show. We got a call coming up here just in a little bit. John, fill us in here until we get that call up. As interest rates, again, John, burped up a little bit at the end of the last week. We'll see what things do taper down. They had the meeting in Jackson Hole. The Federal Reserve was meeting out there. And again, a lot of times when things are brought out at those meetings, sometimes the market overreacts.
Yeah, and the market had overreacted up to this point already. So by the time that when they adjusted rates up, we knew that it was coming. It was already built in. And actually, our rates kind of stayed flat and or trickled back a little bit because we knew what they were doing, and the market had already overcorrected it. Now, when the Fed, sneezes, coughs, whatever they do,
people tend to react, and like Harry was saying with his monologue at the beginning of the show, the stock market down 900 points yesterday, and that's an overreaction. So we'll see some correction come back for the stock market and the bond market.
All right, don't forget, if you're buying your first house, second, third house, it's a huge milestone. It could really set you up for life for a long time. More wealth has definitely been accrued, and you get some value out of your home. There's equity built in, the friendships that you're going to have. There's some stress involved in home ownership. Again, that's why the difference is just bouncing around, calling different people or clicking buttons on the computer. You're just not going to get the right people. It's so important to have a great plan, and we see it every day with these transactions. And again, I have a 30-year track history here of watching what goes down with families and when they're making offers on home, and so important to have that team all set up together for you. All right, let's move off to this call here. Good morning. Welcome to our show. Keith, you got a question about a refinance?
Well, yeah, the house was in my mom's name. She passed 2 years ago, and I was trying to find out. She was supposed to put me on the deed, but she didn't. So I was trying to find out what should I do. I've been making the payments, haven't missed any payments.
Yeah, good for you. I'm glad you've done that so far, John Cole.
You're gonna have to get with it's gonna have to go through probate. I mean, did she not have a trust? She didn't have a will?
No.
Okay, yep. You're gonna have to go through probate. That's where the court sits down and says, okay, who's the next heir apparent to the home? So it's usually a 3, 6, 9 month process, but you're gonna have to go through. I would continue to make the payments, obviously, so that you're not going into default, even though it's in your mom's name still. But you're gonna have to get with an attorney to just go through probate so that they can award you the home, and then you can deed it into your name, refinance it into your name, whatever the case may be. But you need those. Title company will require those probate papers acknowledging that you are the heir apparent to the home, so that they can rightfully put it in your name.
And Keith, there's probably a lot of equity in that house too, right?
Yeah. Oh, yeah.
Yeah, we want to make sure that you get that in your name. What we'll do is after the show, I'm going to refer you to a couple real estate attorneys, and then they'll get you involved with some title companies, and we'll get you all set up for that. You're going to have to just do some legality stuff to make sure that house gets sort of dropped down to you and you're the owner.
Yeah, and if I'm not mistaken, I don't think going through probate is too expensive. So It's just one of those things that you can, hopefully maybe even if it is something that it can't come out of pocket, maybe they put it as you pay them when you're able to refinance the home, take a little bit of cash out to get it all settled and put it into your name.
Fair enough. Good call, Keith. We'll follow up with you. Really appreciate that call. That's good stuff. And again, it helps some families out there. And if you do have older parents or whatever the situation is, you're never too prepared. Obviously, sit down with some trust attorneys, put a will together, a trust. It can be a simple one, John. It doesn't have to be that.
And I like what Keith is doing. He's still making the payment, right?
Of course.
You don't want the bank to have to make a tough decision like that where, unfortunately, if the bank were to find out that his mom had passed away, sometimes they won't even accept payments because they want it out of their name and put into somebody else's name.
Right.
But I like that he's making the payments, doing what's right, so that when it goes through, everything is on the up and up. Payoff is easy. There's no back payment to do, and he knows what he's getting himself into.
Always good stuff here, because first-time home buyers need the knowledge, a plan. Learn about the down payment and the down payment assistance programs. Then you got to follow up with your credit. Understand what credit you have now, what you can do to keep those credit scores moving forward, maybe even increase them if you're going to be buying a house in the next 6 months. All right, maybe we can bump up that credit score a little bit. If you're on the conventional side, it's a huge difference. Saves you money on, of course, John, private mortgage insurance. Saves you money on the interest rate. Having better credit scores works. Not so much on the FHA side, but yes, on anything you're borrowing.
What does it do for you on the outside of the mortgages? It saves you on your homeowner's insurance. It saves you on your car insurance. I mean, credit scores matter all the way around, and you have to make sure that you're diligent about that stuff. I've seen people where their credit scores are just in the tank, and they don't even care and don't do anything about it, and they're just paying an arm and a leg for car insurance each and every 6 months. So you got to just try to do what you can do to save money, especially in these times where everything is more and more expensive.
Kyle, it is tough, isn't it, man? I mean, saving money. I got to pass that fancy coffee. I'm sitting here with this $3 coffee. It's a medium. I don't know what I'm doing.
Hey, for the record, we both went to Starbucks. It was just a choice in what we picked.
I don't know. I'm on some sort of rewards program there. But again, you got to pick and choose, setting a budget. I even looked at it myself this morning as I was writing it down. And I was thinking maybe a little bit heavy on that. Gym membership sometimes. Hey, you got to decide. Is it worth it? Are you going there enough? Things like that. You can always check with your cable company. Boy, I cut that down to nothing in the summer, other than missing a few ball games here and there. I cut my cable bill down in the summertime. I'm not inside.
Sure. Yeah, no, and we were talking about, that's very true, Harvey, but talking about probate earlier, I've done quite a few probate deals lately, just helping estates sell their properties, and it's so important. It makes the transaction so much smoother when you do have everything organized for your kids, and especially when they're dealing with cleaning the house out, getting rid of all mom and dad's stuff, divvying it up between the family members. For them to know that, hey, all we got to do is use our certificate of trust, use the death certificate, and that's all they need to do to sell the house. It's such a peace of mind. And whenever I get a phone call, someone says, yeah, my parents just passed away and I need to sell the house, or, so-and-so passed away, I need to sell the house. I always take a deep breath. I'm like, all right, like, how long of a process is it going to take? And then I love when I go to that first appointment, they've got everything laid out, that the attorney has set up for them and that the estate planning is set up for them. So it's just having that peace of mind. I think it's so, so important.
Yeah, absolutely. I mean, it's just like you said, the peace of mind is the most important thing out there, and you won't have to worry about it.
The simplest way to do it is just do a quick claim deed. You can take your mom. You can actually, if you call places like us, we have the great title companies around Southeast Michigan. They're on mobile. So they'll bring the notary right to your place. If mom's at mom or dad or whoever the situation is somewhere, in a nursing home or something
Hospital,
like that.
Yeah, absolutely. Yeah, they do it all the time.
They do it all the time, and you could just put your name on title there. Again, the best way to do it if you have siblings and others people involved is to go through and get an attorney involved and write it all out.
Yeah, just putting yourself on the title is going to help, but I think you're still going to have to go through probate, right?
No, you own the house.
Even if the mom is still on title?
As long as it's just one person. All you got to do is provide a death certificate at closing and you're good.
All right, well, there you go. So you learn something different. But definitely a trust is the best way to go.
Fantastic. All right, 248-539-9797. You got it on the Hardcore Mortgage Real Estate Business Show. We've got one more segment coming up. You got sports coming up next. Keep it here all day long on 97.1 The Ticket. All righty, welcome back to the show, 9:43. What a gorgeous day outside. You got to tune to the Hardcore Mortgage Real Estate and Business Show, again in our 23rd year. Reach us at Capital Mortgage Funding, where you can find all the top professionals in the mortgage industry putting that great pre-approval together. We call them approval letters now, and you can reach us at 1-800-LOW-RATE, the best mortgage banker. John, let's dive into some. Kyle, of course, joins us. Kyle Lang here, RE/MAX Dream Properties. Let's go up north real quick, Kyle, and across the United States here. Vacation homes. Wow, they're awesome and exciting. Don't wait till November and December, folks. I know we're going to get a mad rush of people saying, I'm not doing the Michigan winter.
I've got 2 clients right now that are both looking at lake houses and stuff like that up north, Kalkaska, Alpena area, stuff like that. The one thing I will say is, guys, for you in Metro Detroit, be thankful that your realtor answers the phone 50% of the time, because the agents up there, getting them on the horn, I got a better chance of getting Joe Biden on the phone, I think, sometimes than getting some of these agents on the phone. It's crazy.
Yeah, it's and getting anything done up there,
Just so slow.
contractors. It's just a nightmare. But you know what? You just got to be patient, like Kyle's saying, and understand that not everybody works like we do here in Metro Detroit.
And one of my clients, they have a great phrase. They said, "This is not an emergency lake house. We want it, but we're not going to rush into it. It's not the end of the world. When it's meant to be, we'll find the right place."
You find the right location up there and the right situation. Again, we've seen families. They're using them personally. They're renting them out. They're giving them friends and families can use them. They're taking it even to the corporate level where they're doing a little bit more of that Airbnb stuff. But great opportunities across. Not only in Michigan, we do mortgages everywhere. So at every state. Again, whether it be in Florida, Georgia, wherever you're looking in Texas, we see Alabama. There's a lot of areas across the country, and of course on the West Coast. It's a lot of fun to buy a second home, and call us so we can get you all set up with a strong approval letter, John. It's the same thing when you're working with us. You really typically hear, if you're buying in Arizona, we're there. We're in Arizona all the time, so we know all these different areas.
Yeah, if you think that you're going to use a place enough that it makes it worth it, then yeah, go ahead and buy. I mean, renting right now, Airbnb right now, it's just so expensive. So if you think you're going to be in a certain location enough that it makes sense to buy, then do it. But you got to make smart. We're not just going to, Kyle's not just going to sell you a home just to sell a home. I'm not going to do a mortgage just to do a mortgage. Got to make sure it makes sense, and you're going to be what I always say, a successful homeowner, and that comes with your primary and or your second home. And part of that is understanding what the expenses that come along with a second home. And I'll tell you right now, it's expensive. And there's, thank goodness that when we purchased our second home, we did it as a family so that we split it across 4 different ways, and that absorbs a lot of the expenses and makes it a lot easier on the budget. But if you were to do it on your own, it's going to drain you.
Oh, for sure. And one thing to do too now is it's so popular. I think a new fad investment is I'm going to buy Airbnb. I'm going to buy VRBO properties, right?
Yeah.
Some communities don't allow Airbnbs and VRBOs. So working with an agent, make sure when you contact the agent, I'm looking for one down in South Carolina right now. And the agent that I'm working with, she has to look at every property. I'm looking in Charleston and the surrounding areas.
What do you watch, Southern Charm? Where'd you come up with that?
We went just a couple years ago.
Oh, you fell in love with the area? All right.
It's so
Southern
nice.
Charm talk.
And so we, but there's specific parts of Charleston that allow Airbnbs and others that do not. So if I would have just said, yeah, we're just looking for a vacation house, she would have been like, okay, well then look at any of these. But working with them, I didn't want to buy a place and then turned out, oh, you can't use it for what you wanted to use it for.
Right. That's very common. There's bylaws and restrictions that come with different areas of that you're going to be purchasing in, and you got to make sure you understand those. The community that we live have up in Gladwin, you can have a trailer on your property. You have to make sure it's hooked up, and you've got the hookups for the
okay. Here we go.
Like
yeah.
that. But you can only have that trailer on there from, I think it's April till October. And then you have to have it off. So what does that mean? You have to have some place to put it, right? And you can't just store it there.
Well, great segue. We run into that here locally, of course. We have so many boat registrations here in Michigan. We're a boating community, and we got wave runners and everything else, all the watercraft and the trailers and everything else that go along. Right, hey, Kyle, each subdivision has master deed and bylaws. And again, you move into a gorgeous subdivision, you might not want to stare at your wrapped up boat. Like I'm thinking about putting my pontoon on that driveway this year.
Well, that's the thing. So one of my really good buddies, he's got a beautiful house out in Brighton on the water, but it's not an all sports lake. So he can only have this little pontoon, and he's cruising around. He goes, I look across at the other lake. He goes, I feel like I'm riding a tricycle on the freeway sometimes.
Right.
So like, do your research on that stuff and make sure you know exactly what your lake and community allows.
Yeah, that's.
I wasn't the agent, so it's not my fault.
Yeah.
All right, so it sort of segues into the your life of purchasing a house, setting that budget. You need some extra money to purchase a house. That's what was going on last year and the year after that. So I just want to throw it out there. We talked about saving some additional money. I had written down a few things. Get that side hustle. Look, if you're trying to get a house in today's marketplace and you're having trouble saving money, if you don't fit the criteria of a down payment assistance program, John, get a little side hustle going. It's become a really good thing for a lot of families out there. Whether you're driving around, Uber driving or whatever that might be, or Lyft driving, whatever your side hustle might be. There's a lot of employment all around Southeast Michigan. Maybe some opportunities to make a little bit extra money. I could see myself before I had the kids definitely doing that kind of stuff.
Absolutely. Yep. And just But again, making sure that it's documented, right? Because you got to be able to show where's this income come from. How many times, John, do people call you and say, yeah, well, I got, 10 grand underneath the mattress. It's like, well, mattress money isn't going to really help us right now.
Cash is king, except for in the mortgage industry. You just cannot track cash. So you got to make sure that you do it the right way. We've got ideas for how to get that cash deposited slowly, surely, do it the right way. But it's going to take some time. So making that call up front and giving us the opportunity to give you advice before you need to make hasty decisions is the best way to do it. And then same thing with credit, right? Let's take a look at your credit before you're found that dream house, because if there's anything you need to work on, you want time to be able to do so.
All right, we're going to talk about some fun stuff here. Always buying a house is a lot of fun and exciting for so many families. Unfortunately, we're probably going to have a few more months of inflation. So as Harry mentioned, we're probably have to look at this industry as like a 90-day industry. Like right now, you're in this bubble to purchase a house. Really, the end of summer, we're going to call it, even though we got another full month of that. But end of summer type into the fall, about a 90-day window. What's exciting for some first-time home buyers? What can they look forward to?
So right now, and this works for first-time home buyers and people that are going to sell that first-time house of theirs as well. People without kids don't care when the school year starts, right? So that's the running thing is everybody, I want to get my house listed in May or June. That way, whoever buys it from me can be in for the school year. So when I first started in the industry, my busiest months of the year were always October until about the first week of February, because that's when everyone, the summer was over, they took time out and they wanted to buy a house. So if you own a house right now that you're considering selling below $250,000, I'll say, that's like your first time home buyer sweet spot right now. Get ready to put it on the market now, because those people, they don't care if they don't have kids, they don't care when the school year started. So they're going to be out there, they're going to be looking with that, flipping that coin. Buyers, get ready to go now. If you're a first time home buyer, the winter and the late fall is going to be a great time for you to find a great deal on a house and get you into an area that, had the house waited to list until the spring, you probably wouldn't be able to afford.
I like the idea too that you get out there too, Kyle, right away. Again, if you're thinking about selling your house, call Kyle Lang. He'll come out there. You just call Kyle at Remax Dream Property. So get his opinion on it. Find out what improvements you have to make. Now, my buddy Nick was out at a future listing the other day, and we said, hey, hold on here. Let's just take the next week or so and dress this house up a little bit. Maybe get you that $5,000 or $10,000 extra on the sell side.
Absolutely, yep. And so that's what we do when we're going in for a listing appointment. We're always going to look at what improvements can be made. I don't want you to have to spend $10,000, but is there anything little, a small task that the homeowner would feel comfortable taking on that I say this is really going to help us? And even if it doesn't add a monetary value, if it at least it'll help us sell the house, right? Like here in Michigan, they don't give us credit for finished basements, right? A lot of the time, but that finished basement's still going to help you sell the house. Absolutely. It might not be a dollar for dollar upgrade, but if you got your basement finished and you throw a fresh coat of paint up and you redo the ceiling or something like that, it's going to look a lot nicer. It's going to attract the buyer.
What if you have a second bathroom down there? Because it doesn't count in the appraisal, doesn't count. You're not going to get credit for it. But when someone walks in and says, "Oh my gosh, I've got a second bathroom down in the basement that can be used if I have guests or your wife, your girlfriend, whomever," and that way you just have an extra opportunity for someone else to come in there and enjoy the home. And that's like Kyle's saying, that's the most important thing, and just doing the things that make sense to help you sell the home and so that you can enjoy it.
They're called, you throw your in-laws down there. You're the in-law suite. The sister-in-law, she comes. She's got a place to stay. But, yeah, again, let's just go over that real quick. Not dollar for dollar. It's living space. There's no doubt about it. But it's not considered square footage in comparables. But Mike Tomczyk will tell you, the top appraisers in Michigan will tell you that it's compared with the other walkout basements, for example, or the other finished basements that sold. So it will be brought up and it's put on an appraisal. I always tell people, when you're down there sleeping, you got 3 buddies sleeping down there in the 2 extra bedrooms. Yeah, they're sleeping in the bedrooms in the basement.
Beneficial, right?
But it might just not count as square footage. Definitely living space.
And one thing, too, I get a lot of phone calls. Hey, I'm thinking about doing this to the house. How much will it increase my value? And honestly, unless you're getting ready to sell your house now, I can't tell you that, because I can't tell you what the market's going to be like in 5 years when you're ready to sell. But what I tell everyone is first, can you afford whatever upgrade that you want to do? Secondly, are you going to get the enjoyment out of it while you're living there? And if both of those are yeses, then go ahead and do it, right? Because you're the one that has to live in the house. My dad put way too much money into his garage a couple years ago, but my parents aren't moving anytime soon. And my dad spends, if he's not at work, he's out in that garage and he's enjoying himself. So it's like, if you're going to get the enjoyment out of it, it's your home. Right. Enjoy being home.
Right. Use it for what you want.
100%.
And that's the same thing. Same thing as your father's. My house in Royal Oak, I've thrown so much money into that house, and probably never going to get what I have into it. But that's okay. I've been there for 23 years. Don't plan on moving anytime soon, and I enjoy it.
All right, even with this increase of homes on the marketplace, just in the last, truly, I'm going to say in the last 3 months, because they're really not, fewer homes on the market, sellers are facing less competition, attracting new pools of buyers. I mean, yes, the inventory's picked up a little bit, but still, we're just going to say it's just a huge lack of inventory out there. So if you're thinking about selling your home, now's a great time. You get with these great real estate agents, and that's always a great start. Well, you got a listing or two that you want to promote? Anything going on this week?
Just listed 18745 Dale. It's a perfect first-time home buyer property. It's in Allen Park. All my downriver people, everyone loves Allen Park. Finished basement.
I saw the pictures. That thing's a winner.
Beautiful garage, updated kitchen. The front living room looks like a Pottery Barn ad. I mean, you walk in, they've done really good work to this house.
All right, I don't think we have time for that caller. Hey, Eric, you're going to get that caller. We're not going to go to him, but let's just keep it here and we'll just keep rolling around. That's an awesome first-time home buyer house. Like you said, you just mentioned a few of the whole bunch of things that why this house makes sense for families. Do you mind me throwing the price out there?
$210,000.
There you go, $210,000. John, I said earlier in the show that rents have been going through the roof. The average rent's over $1,800 across the United States. You're talking a $200,000 in that ballpark house. I'll just say that the payment's probably close to $1,500 with tax and insurance.
I was going to say $1,600. Yep, exactly. I think, and that's on a minimum down payment loan, right? Somewhere between 3% and 5%. You can get in.
Right, very
or you
little
can get a
down.
2-bedroom apartment with noisy neighbors on both sides for the same price. So
And never build any
You
equity.
pick.
Right, yeah.
That's really the sweet spot right there. That's, I think, who we're going to get out and keep this housing market going on is those first-time home buyers out there. We know the millennials need to buy homes. We want to keep encouraging them to do so. Again, if you're out there, you're younger, your kids are thinking about buying a house, send them over to us, the fine folks at Capital Mortgage Funding, 1-800-LOW-RATE. We then get them hooked up with the great real estate agents that we work with, and then we put it all together. And I got a guy actually closing on Monday. It's going to be really exciting. His first little condominium he went, very affordable. This guy's working too many hours. He doesn't want to cut the lawn. Under $100,000. I just saw his payment with the association fee was like $800.
Wow, that's you can't beat that. That's the crazy car payments right now that's just
Exactly.
It's just ridiculous.
A 2-bedroom too. He's going to have a roof over his head, and hopefully, he treats it like a car payment, John. And even though someone can pick up a 30-year mortgage, there's no prepayment on any of these mortgages. You can pay them down. You can own these places free and clear, John, and have some home ownership. Boom, right there. If you ever needed the equity.
Right. I mean, you got to talk to your team. Talk to your team and make good decisions.
All right, that music says we got to go. I see Pat Caputo. He's outside. He's on the on-deck circle, ready to take his cuts. Keep it here, of course. We got tons of sports coming up. Find us at Capital Mortgage Funding at 1-800-LOW-RATE, the best mortgage banker throughout the week. Want to thank Kyle Lang, of course, RE/MAX Dream Properties, and a quick salute to you and all the RE/MAX agents out there. We'll catch you again. We got Labor Day weekend. Hold on a minute. Labor Day weekend next. We'll see you in a couple weeks here on the Hardcore Mortgage Show. Keep it here.